Assalamualaikum. For the introduction of the assignment, conventional accounting is a method generally used by the managers within a company. It focuses on aspects such as decision making, the future of the company, and timelines. This method gives the managers a better idea of the current company situations and how it affects finances in the future. Meanwhile, Islamic accounting offers the information that customers of Islamic bank financial statements rely on to access the Islamic bank's level of Sharia compliance and determine the right and duties of all interested parties in line with Sharia principles. Both Islamic and conventional accounting are concerned with providing valuable economic information to enable customers to make logical decisions by allowing comparisons and so lowering the cost of evaluating different investments. The major differences between accounting and Islamic accounting are IFIS adhere to Sharia law, which is Islamic law, profit sharing mudharabah, safekeeping wadi'ah, a joint venture musyarakah, cost plus finance murabaha, leasing, and international cash transfer system hawala. Islamic insurance takaful and Islamic bonds are among their own set of financial instruments sukuk. Next, the background of Hsbc Bank. The Hong Kong and Shanghai Banking Corporation Limited established its first office in Malaysia in 1884 on the island of Penang with license to print currency notes. It bought the Mercantile Bank in 1959, which had been operating in Malaysia since 1860. In 1909, Hsbc opened its first office in Malacca, and by the end of 1912, it had expanded to include offices in Ipoh, Kuala Lumpur, Johor Bahru, and Kota Bharu. Hsbc was the first foreign bank to be granted a Takaful Islamic Insurance Business License in Malaysia in 2006. Hsbc Amanah Takaful Malaysia Senjam Berhad began operations in August 2006 as a joint venture between Hsbc Insurance Holdings Limited. In March 2019, Hsbc exited the Takaful manufacturing business to focus on its banking and wealth operation in Malaysia. The bank has weathered change in all forms such as revolutions, economic crisis, new technologies, and adapted to survive. The resulting corporate character enables Hsbc to meet the challenges of the 21st century. Next, for the background of Muamalat Bank. Bank Muamalat is a renowned Islamic bank founded on October 1, 1999. And supervised by the Islamic Financial Services Act of 2013, IFSA. Bank Muamalat Malaysia Berhad, Malaysia's second full-fledged Islamic bank after Bank Islam Malaysia Berhad, is set to play a role in delivering Islamic banking products and services to Malaysians of all races and religious beliefs. The bank operates through its head office in Kuala Lumpur and 59 branches nationwide. Deposit accounts, asset management, financing needs for autos, residences, and personal use, as well as wealth management products such as family and general takaful, investment, Islamic estate planning, and non-financial items are all available through Bank Muamalat. From cash management to payment solutions, including trade and export finance to international foreign exchange, financing, and capital market operations, the bank offers business and institutional customers to full product range of a top corporate and investment bank. iMuamalat, the bank's internet banking solution and self-service terminals, are also available through Bank Muamalat's network of ATMs, CDMs, and CICOs at about 141 locations. Bank Muamalat is a part of DRB Highcom Berhad Group, which owns 70% of the bank shares, and Khazanah Nasional Berhad owns the remaining 30%. Next, for the background of Kuwait, Kuwait Finance House is the first Islamic bank established in 1977 in the state of Kuwait, and today it's the one of the foremost Islamic financial institutions in the world. Established in January 2002 as a wholly owned subsidiary of Kuwait Finance House, Kuwait, an industry leader for more than 30 years. Kuwait Finance House Bahrain pioneers the introduction of compelling financial solutions in the fast-growing, high-demand Islamic banking industry. Kuwait Finance House offers a wide range of Sharia-compliant banking products and services in Kuwait, Bahrain, Saudi Arabia, the United Arab Emirates, Turkey, Malaysia, and Germany, including real estate, trade finance, investment portfolios, commercial, retail, and corporate banking. Their missions are to create wealth and asset for their stakeholders and promoting awareness and the use of Islamic banking and financing vehicles worldwide.
I will present about the basis preparation. First, basis preparation for Hsbc Bank. Basis preparation for financial statement of Hsbc Bank is comply with international reporting standards. Financial statement of Hsbc have been prepared according to international reporting standard as issued by the International Accounting Standard Board, including interpretation issued by the IFRS Interpretations Committee and as endorsed by the European Union. Thus, there were no unendorsed standard that affected this consolidated and separate financial statement for the year ended December 31, 2019. And Hsbc implementation of IFRS resulted in no variance between IFRS issued by the IESP and IFRS endorsed by the EU. Next, Hsbc financial statement will present in US dollar because the US dollar and currency linked to it from the major currency in which Hsbc transacts and funds its business. Assets, liabilities, and result of international operation whose functional currency is not US are included in the consolidated financial statements. At the time of reporting, dollars are converted into the group's presentation currency. Other countries recognize exchange discrepancies. Exchange discrepancies previously recognized in other comprehensive income are recognized when a foreign operation is sold have been moved to the income statement. Financial statement in Hsbc were prepared on a going concern basis. The director have been satisfied that the group and parent company have the resources to continue in business for the foreseeable future. Director will review a wide range of facts relevant to the current and future situation in reaching their evaluation, including future profitability, predictions, cash flows, and capital resources. Hsbc evaluates good practice guidelines published from time to time by relevant authorities and standard setters, and will examine the application and relevance of such guidance, upgrading disclosure where necessary in accordance with the principle of the UK Disclosure Code. Next, Muamalat Bank. As for basis preparation for financial statement in Muamalat Bank have been prepared according to Malaysian Financial Reporting Standards, International Financial Reporting Standards, and the requirement of the Companies Act 2019 in Malaysia. Muamalat Bank financial statement are reported in Ringgit Malaysia and being rounded to the nearest thousand except otherwise indicated. The bank also presents the statement of financial position in order of liquidity, except for the following assets and liabilities which are reported at fair value. The financial statement of the group and the bank are produced on a historical cost basis. Example of the fair value is financial investment at fair value through other comprehensive income, financial investment at fair value through profit or loss, and Islamic derivative financial instrument. As for Kuwait, the consolidated financial statement comprises the financial statement of the bank and its subsidiaries as of 31st December every year. The financial statement of the subsidiaries are prepared for the same reporting year as the bank, which use a consistent accounting policy. All intergroup balances, transaction income and expenses, and unrealized gains and losses resulting from intra-group transaction are eliminated. Then, subsidiaries are fully consolidated from the date of control, then transferred to the group and continue to be consolidated until the date when the control stops.
Next, I will explain about Sharia compliance alternative to conventional financial instruments. The term of Sharia compliant is used in Islamic finance to denote that a financial product, service, and activity provided complies with the principle of Sharia. Sharia compliant must be free from 5 elements that are riba, maisir, gharar, rishwah, and jal. Sharia's objective in requiring the avoidance of these elements is to ensure social justice and fair play to all parties in the transactions. Sharia compliance alternative to conventional financial instruments for saving or current account is current account atawaru, which is a Sharia compliant deposit account where you can place your money and receive a fixed return every month. The contract used for this product is murabah, wakalah, and hamstidiyah that combine with a promise under the wa'ad contract. Effectively, it works when customers buys a commodity which is through a party banks that act as agents from suppliers at a price purchase, which is purchase transaction, and subsequently sell such commodity that is through the bank acting as an agent to the bank at the sale price, which is sale transactions. Other than that, fixed term account is Sharia compliant alternative to a fixed deposit, which is a capital guarantee deposit with a fixed profit return that allows customers the flexibility of managing funds according to their short-term or long-term needs, such as a minimum term of 5 months and up to a maximum of 60 months. In this product, the contract they issue is tawaruk, wakalah and murabaha. It works when a Sharia compliant commodity has been used as the underlying asset for purchase and sale transactions. Next, property financing, which is without the development, is a catch-all term that applies to a variety of finance options relating to the property sector, which are bridging loans, development finance, commercial mortgage, and auction finance are all types of property finance, but in Sharia principle apply to transaction in general. In bank muamalat, the contract they issue for property financing is wakalah, murabaha, and buy wadi'ah. However, it does work instead based on making a profit through the sale of commodities. Basically, the buyer asks the bank to buy the exact item that they want financing, but then it will sell to them at an additional markup. Letter of credit is similar to the conventional letter of credit, that is a written undertaking given by the bank at the request of the buyer to pay a seller, which is the beneficiary, to the effect that the bank which issues the credit will pay the seller a certain sum of money. This letter of credit can be issued under 3 contracts, which are Al-Wakalah, which is agency, Al-Murabaha, that is markup cost plus, and Al-Musharaka, which is joint venture profit sharing. By applying this Islamic concept, that we can offer a solution to what lies at the core of the problem in the current practice of letters of credit. We can read the system of interest or riba rebate on funds provided by banks. This is very replaced with a profit sharing arrangement.
Next, I would like to present about the differences of components in statement of financial position. First and foremost is differences of component in bank muamalat. Among the assets contained in this statement, bank muamalat have Islamic derivative financial markets, financial investment at fair value through other comprehensive income, financial investment at amortized cost, which is for accumulated portion of the recorded cost of a fixed asset that has been charged to expenses through either depreciation or amortization. Moreover, is differences of liabilities. Component for liability are bills and acceptance. Payable is an investment property, is one that is purchased with the goal of profiting from rental income, eventual selling, or both. Other than that is Islamic derivative financial liabilities, provision for zakat and taxation, resource obligation and financing to sold to jagamas, deferred tax liabilities, and subordinated sukuk. Is the differences in Hsbc Bank. The differences of components in asset are cash and balance at central bank. Trading asset. Trading asset mean a collection of securities owned by a company for the aim of reselling for a profit is known as trading asset. Next is financial assets designated and otherwise mandatory measured at fair value through profit or loss. Financial asset designated at fair value, loan and advance to bank, loan and advance to customer. Furthermore, are repurchase agreements, trading liabilities and financial liabilities are designated at fair value. Meanwhile, the differences components of equity are total shareholder. After all obligations are paid, shareholders' equity is the shareholders' claim on asset. It is determined by subtracting total asset from total liabilities. Thirdly is the differences components in Kuwait Finance House, Bahrain. The differences components of asset are cash and balance with Central Bank of Bahrain and due from banks. The meaning of due from banks is to facilitate the transfer of funds. Next is bank keep deposit in other banks. Those bank assets referred to as due from bank deposit or correspondent bank balance are a part of every bank score and invested cash. Next is financing contracts and investment in sukuk, which is sukuk are aggregate and undivided shares of ownership in tangible asset relating to a certain project or investment activity. Thus, an investor in a sukuk does not hold a financial obligation owing by the bond issuer, but rather a piece of the asset related to the investment. Other than that, its investment in a society's receivable. Moreover, the differences components for liabilities are customers' current account due to bank, due to non-bank, and subordinated wakala payable. Wakala is an agency contract in which the account holder hires an Islamic finance institution to manage investment activities. Lastly, differences for equities components. The first one is share capital, statutory reserve. Statutory reserve are assets that an insurance company is obligated by law to keep on its balance sheet in relation to its unpaid commitment. The next differences is fair value through equity reserve, proposed dividend, and retained earning, which is the accumulated net income of the corporation that is retained by the corporating at a particular point of time.
Next, I will present about the Statement of Financial Comprehensive Income. Hsbc Statement of Comprehensive Income has before income tax and income tax, while Muamalat Bank only has income tax effect. Meanwhile, Kuwait Finance Hub doesn't have any of those. Profit before tax is also known as earnings before tax. It is a measure of company's profitability before it pays its income tax. It provides investor and company owners with useful financial data regarding the business operating performance. By excluding the tax factor, PBT minimizes the potential impact of taxes on the company's profit. As for the difference of comprehensive income in Muamalat and others bank is changes in expected credit losses, income tax effect, realized gain transferred to profit or loss on disposal, net unrealized loss on equity securities at fair value through other comprehensive income. Expected credit loss is a probability weight assessment of credit losses throughout a financial instrument expected life. The gap between the cash flow owed to an entity under a contract and the cash flows that the entity expects to receive is known as cash deficit. Expected credit losses take into account both the amount and the timing of payments. A credit loss might occur when if the organization expects to be paid in whole by after the contractually due date. As for Kuwait Finance House Bahrain, format in comprehensive income of Kuwait Finance House of Bahrain is different from Hsbc Bank and Muamalat Bank. The format is they will total up the operating income and operating expenses. In Kuwait Finance House Bahrain, the income is from return on equity mudharabah and wakalah. In their operating income, they have gain income from sukuk. Also in their operating expenses, they have staff costs and depreciation and amortization.
For the conclusion, Alhamdulillah, thanks to Allah for His successfully letting time. We have benefited many and something new to learn throughout the process of completing coursework assignments for SCC 3603 subjects in this teaching and learning. In the beginning, when we completed this task, we discussed that the task is divided so that it will make it easier to collaborate on information and to solve the problems that arise. We have benefited greatly throughout the process of completing this task. Indirectly, we were able to gain new knowledge extensively. Therefore, this assignment provides us with knowledge and experience that will benefit us. From this project, we learned about the background of three chosen banks, which are Hsbc Bank, Muamalat Bank, and Kuwait Finance House. We also learned about the basis preparation of each bank, and not to forget, we learned about the differences components in statement of financial position and statement of comprehensive income. The conclusion we have reached after completing this task is to gain a variety of knowledge and teaching throughout the process of this task. Finally, millions of thanks to all those who were directly or indirectly involved in the production of this assignment. We hope that this will work.